Hello, VV Nation. Glenn Tompkins here from VectorVest YouTube channel. Glad to be here. Glad to bring another video to you. And of course, this is a video that you wanted. Well, I did a video real recently about viewers' choice stocks. I'm going to do a part 2 to that. So I've got a few more stocks that you guys wanted me to do stories on. As long as I could do a story and figure out how to put this all together, I would do your stock. So I've got a few more. If you want to know if your name hit the list, you sit right there. Hey everybody, Glenn Tompkins, Senior Instructor here at VectorVest. Glad to have you here. Glad that you're here to watch this video. I think you're going to enjoy it because this video was drawn from stocks that you want me to take a look at. If you're brand new to the channel, I invite you to hit the subscribe button. Help us to grow the channel. Don't forget to hit the bell icon so that you'll get alerted when videos like this come out. And if you like the content, hit that like button. Let me know that you appreciate what we're doing for you. Keep in mind, we do the work, you reap the rewards. We want to bring you the information that is useful to helping you grow your portfolio. All right, so with all of that, let's get into our first stock. And the first stock happens to be JP Morgan. I got JP Morgan from Tom Willingham. So that's my first stock, JP Morgan. Now, with everything that's going on with interest rates on the rise right now, I think that banks are going to be the beneficiary of that because that's going to be a good thing for them as they're going to take in more interest rates when people go to borrow money. So a couple of stories that I found here. JP Morgan to acquire global shares for an undisclosed amount. What was global shares? So let's talk about that. Global shares, JP Morgan recently revealed that it's entered into an agreement to acquire a cloud-based share plan management software services provider, Global Shares. The strategic impact on that was that JP Morgan will eventually add Global Shares' wide client base of over 600 corporates and almost $200 billion in assets under administration. Moreover, post-acquisition, JP Morgan will integrate Global Shares' cap table management capabilities to its asset and wealth management division. The management says, the CEO of JP Morgan, Mary Callahan Erdos, said the addition of Global Shares is complementary across our entire JP Morgan franchise, from new client acquisition for our global private bank and U.S. wealth management businesses to provide new, innovative capabilities to private and public companies globally and helping their employees manage their wealth. That sounds like they're putting more into the company to help them to grow. All right. That's one news that I have on JP Morgan. The other one is, wow, this is always a good thing. JP Morgan Chase declares a common stock dividend, and they also declared a preferred stock dividend. Dividends in a time when high inflation to get people to come into your company is huge. You're going to see more of this, folks. Mark my words. You're going to see more of this in the coming quarters, the coming earnings quarters. You're going to see this. You're going to see mergers and acquisitions as well. And you're going to see companies doing a lot more buybacks as well as we start to watch interest rates go higher. All right. So two stories that I have on JP Morgan so far by way of the news. I like the company. Now, the next one was a uranium company, UEC by Anawanda.com. Anawanda.com. Now, the stock that they gave me was UEC, but three best nuclear stocks to add to your list. There was 3 stocks in here, but I want to concentrate on UEC as far as the list is concerned. Now, why is uranium such an important thing right now and could be looked at as a booming industry or a booming place to have money? Well, or to put your money into. Because nuclear energy is a way of clean energy, right? Outside of the electric, outside of the solar, outside of the wind, good clean energy comes from nuclear power. But the other side of it is that you can have nuclear meltdowns. So it gave me a lot of great information in regards to, I didn't know this, that we had 96 reactors in the United States, followed by France, followed by China. And you know something, the countries that don't have nearly as much nuclear reactors online, they're going to start thinking about putting on more of these reactors for the purposes of clean energy so that they can divest themselves or get out of fossil fuels. This is one way to go. Another way to go is to go towards the avenue of electric vehicles like we're doing here in the United States. Or we can continue to drill for fossil fuels. Wherever you sit, that's all up to you. Doesn't matter to me. I just want to get to a point that hopefully we can get off of fossil fuels. And if we're not going to do that real quick right away, then at least give us the opportunity to be independent from everybody else and do our own until we get to the point of much cleaner energy. Well, that's my opinion. So the stock that was given again by Anawanacom was UEC. So here's the stock. UEC is becoming less appealing to investors after a negative 3.41% fall. This was done a day ago. So I wanted to take a look at the trade. I wanted to take a look at what the stock says in the VectorVest software, of which we'll do. But I wanted to address this. I still think that the uranium space is going to be a booming space, especially if more and more countries are getting on board with building more nuclear reactors within the countries for nuclear energy, which is a cleaner version of energy. So, even though the story says this, let's go take a look at the industry. Let's go take a look at the sector. Most of all, let's go take a look at the stock. All right. So that's my next stock. Now, the next one is a company called MQR MARTA. And this is another story done a few days ago. Even though it's down 70%, I'm not selling MARTA. So this is an op-ed piece, right? One such company down 70% from its 52-week high. MARTA's customizable payment cards are helping banks and other companies in the e-commerce space prevent fraud and unlock flexibility in innovative ways. So even though the company is down, the writer of this story is saying, I'm still holding on to it. So I went to try to find out more of what MARTA was all about. It's headquartered in Oakland, California, founded in 2010. It provides its clients with a card issuing platform that offers the infrastructure and tools necessary to offer digital, physical, and tokenized payment options without the need for a traditional bank. Sounds a little bit like cryptocurrency, doesn't it? All right, the company's open APIs are designed to allow third parties like DoorDash, Klarna, and Block to rapidly develop and deploy innovative card-based products and payment services without the need to develop underlying technology. So I'm going to click on continue reading. Something that I also saw here. This is right. One such company, as a result of the stock. Nope. Even though it's down big, I'm still not selling MARTA. It's customizable pay. I read that. Cutting down on fraud. And this is probably a big part of why the company has some good upside. As the pandemic has made us more reliant on digital payments, attempts to steal payment data have risen too. According to a report by the FBI, phishing scams were up 110% in 2020. Meanwhile, 63% of people surveyed by MARTA expressed concerns about their bank's ability to detect fraudulent activity. This is the kind of problem MARTA excels at solving. So even though the stock is down, it is moving towards the direction to making digital payments more secure. And I think that makes it even a lot more, what's the word I'm looking for? Attractive to get into. All right. So I'm going to close this out. And let's get to my next story. There it is in MARTA. Excellent numbers and cheap valuation. This is from a different source. A couple of days ago, it delivered on an excellent quarter in quarter one of 2021. And I looked at it and I said, that was a year ago. Why is this coming up? So let me back up a little bit. MARTA makes more than 60% of revenue from Block, which is formerly Square. All right. So they make Square was the way to be able to take payments as a DJ. I could take payments by way of Square. Just swipe your card, go to my Square account and take your money. Formerly known as Square. This is important risk factor that cannot be ignored and has to be considered when analyzing the stock and its risks. So I went down Look, this is still 2021 quarterly quarterly processing volume. Quarter 4 2021 up 76%. Quarterly gross profit up 108%. So then I said, wait a minute, I need to know what's going on now. Non-block revenue grew 147%, which is a very strong number and above expectations. Another company comes into effect here. Afterpay is another significant client for MARTA. Since Afterpay was also acquired by Block, which was formerly Square, MARTA will be adding Afterpay into its Block business in 2022. Leaving this factor aside, management was expecting a small reduction in customer concentration for 2022, but instead, the reported numbers will show a slight increase in revenue percentage coming from Block next quarter due to Afterpay being recognized as part of Block. So there's some good stuff behind it driving the stock that could be driving the stock's price higher in regards to Square, aka Block, and also Afterpay. All right. So another stock that I like, we'll take a look at it. My next one is on oil stocks. Now, the stock that I wanted to look at, and let me say that MQ came through from John D'Angelo. Sorry about that. MARTA came through from John D'Angelo. All right. My next one is MPLX, which is from Brent England. But in looking at this story, trying to put the story together, they're intermingled together. Marathon Petroleum, MPC, along with MPLX. So I needed to define the differences between the two. Marathon is the largest refinery system operated in the country and a leading downstream energy company. It has been benefiting from rising prices and the resurgence in demand, but it's also using the opportunity to invest in the renewables market. Clean energy. And I'm seeing more and more that oil companies are reinvesting or investing in renewables. Currently, Chevron went and bought renewable energy, REGI, and I'm thinking we're going to see more of that. When I look at renewable energy and I look at clean energy, I think even the oil companies see the writings on the wall that they're going towards them as well. All right, so I just put that out there. So I'm going to go and put up MPLX. MPLX. Now, and I look at this, let me tell you a little bit more about MPLX. MPLX, now this is Marathon though, but MPLX falls under a little bit of Marathon is a partnership. So let me tell you, MPLX is a partnership that owns both pipelines and gathering and processing assets with extensive holdings in the Appalachian region. The asset base is made up of pipeline assets dropped down from Marathon Petroleum, which is its sponsor, and gathering and processing assets from MarkWest, which it acquired in 2015. MPLX also acquired Andover Logistics in July of 2019. So mergers and acquisitions are something else that are going to happen coming into the next quarters as well, as I mentioned. So Marathon just announced it was entering into a 50-50 joint venture with Finnish refiner Neste to create the world's first and only renewable fuels maker with global capacity. The project will convert Marathon's Martinez, California refinery to make renewable diesel from residues, and is expected to be capable of producing 730 million gallons per year by the end of 2023. Phillips 66 is expected to come out with a facility that produces 800 million gallons per year in 2024. All right. So now this does get me into another story. Marathon, there was a shortage or a shutdown of a pipe. Marathon restarts the Ozark pipe following a leak. This was done yesterday. MPLX is part of this as well. Marathon and MPLX has resumed flows in its Ozark pipeline in Illinois Wednesday, with the pipe flowing at that number or 90% of its nameplate capacity following a leak reported late last week. All right. So we're going to take a look at MPLX, but MPLX in MP, a lot of people say that MPLX does all of the stuff that they need to do, but primarily for MPC, for Marathon. that was something I was looking at. All right. Now, MPLX again comes from Brent England, and I got another stock, 7 dividend stocks to keep in mind. And this next stock, which was given to me by Marie Lala, thank you for this stock. Caterpillar is a stock that's been around quite some time. From a dividend perspective, I think I love this stock. It's a namesake that everybody knows about. Sitting closer to its 52-week lows than its highs, though. Caterpillar was starting to make a big move after the passage of the first infrastructure bill, but it now has been hit by larger macro issues affecting the global economy. But that's good news. It means the stock is currently in limbo and on sale. Usually when good quality stocks go down, people look at that as good buying opportunities. Fortunately, in the U.S., rising inflation is a consequence of rising growth. And that growth means more Caterpillar equipment to build roads and housing developments, maintain farms, and handle mining operations. All right, so let's take a look at these stocks. I'm going to go to my watch list that I've made of these stocks. Marathon, there's UEC, Caterpillar, MPLX, JP Morgan, and MARTA. Now, put this all together, sort them by VST. Just about every stock in this list has a VST above 1 with the exception of MARTA, the card company. All right. Just about every company has positive earnings and positive earnings growth with the exception of MARTA. Every one of these companies have a buy or hold recommendation with the exception of MARTA. John? All right. So we're going to still peep it out. I like the news that the company is trying to go after securing these cards. Could this be a buying opportunity with the news that's incorporated in the stock? So good earnings growth across the board. Every one of them have double-digit earnings growth, earnings per share, relative values. Which companies have the best upside? Marathon should outperform a AAA corporate bond by 53%, Caterpillar by 30%, MPLX, which is under that MPC, should outperform by 44%, and JP Morgan by 16%. All right, let's go take a look at these companies on the graph real quick, view the stock graph. So we've got the news behind them. All right, let's go put these on a 3-month graph. MPC, Marathon, I do like the rising earnings. It's a petroleum company. As petroleum prices were going up, all of the petroleum companies were going up. Right now, MPC is sitting in a little bit of a channel. And remember, it had a leakage in one of its pipelines. UEC, I still think uranium is going to be something to be a reckoning with because people are pushing, I believe, more towards some possibility of building more nuclear reactors. All right, big update today, currently above the 20-day exponential moving average, big volume as well. Keep your eye on earnings. I don't like the earnings. Now, the earnings still are positive just by a penny, and they're growing their earnings at a clip of 23%. So the company is being run right. But I'd really like to see rising earnings. Next one, Caterpillar. I like this stock. Good upside potential. The safety could be better. It is in an uptrend. Earnings per share, $12.59. Love the earnings. Love that. Earnings growth of 26%. And remember, the story was saying that the stock is off of its highs, could be running up. I like the big update today. Would like to see it continue to rise and break through the 3-month high. The next one is MPLX. Again, with MPC below the 20-day, starting to rise, but a little bit of indecision in the rise. The earnings is still higher than it was 3 months ago. I would keep my eye on this. I'd like to see it take out the 3-month high. Next stock is JP Morgan. And now with earnings, interest rates starting to rise, keep your eye on the banking stocks. JP Morgan is a namesake in the banking industry as far as investment banks. Love the earnings per share. Volume is good. Just breaking above 2 things. Breaking above a 20-day moving average. Which one is this? The 20-day exponential moving average, and just broke through a level of resistance of 139.68. Keep your eyes on the banking stocks. And the last stock in here is MARTA. This is that card company with Afterpay, with Block, aka Square. They're making money. They are making money, but the earnings per share shows me that it's fallen over the last 3 months, and it's in negative territory and is negative earnings growth. maybe they're not being run well. That could be something to be considered, but they are currently coming off a level of a low above the 20-day exponential moving average. I'd like to see it break through this level of resistance of $12.36. All right, so those are my next new videos. Again, I want to say thank you to Tom Willingham. I'd like to say thank you to Anawana Com, John D'Angelo, Brent England, and Marie Lala. So until the next time I come through, keep those stocks coming in the comments within the videos. I may do another one soon, but at least over the last 2 weeks, I've made sure I've recognized some of our faithful viewers who want me to take a look at some stocks. As long as I can get the stories, I will put together the video. With that, folks, this video is over. And until the next time, see ya.